What's good, YouTube? Welcome back to another video. Today we're going to be recapping a trade I took today, and it was just a continuation play. Today is June 24th, and this trade happened during New York session, so New York AM. So what I like to do before the market opens is top-down analysis. So I'll go to the 4-hour chart, right, and look and see where my draws on liquidity for the day are going to be. So the first draw on liquidity today was this 4-hour high right here. That wick stood out to me, so that was my buy side target for the day. And we also had this 4-hour wick low right here. That's a prominent wick. That was my sell side target, right? So this is 4-hour wick low, and then this would be the 4-hour wick high. So those are my targets for the day. And then I'll drop down to the hourly, see what's going on. You could see we're just consolidating, prices consolidating right here, moving like a barcode. Drop down to the 15-minute. What do we see, right? So let's keep dropping down. So this was, all right, yeah. So this should look familiar to you if you traded today. So what happened, right? On market open, we get this downward closing candle, and then we get a strong bullish move up, and this probably faked out a bunch of people, right? Where was that? I missed it. Yeah, okay. So this move definitely faked out a bunch of people, right? IFVG closing strong to the upside, but this doesn't confirm that we want to go to the 4-hour high, right? As you can see in real time, this is a lot of value here, so pay attention right here. We get a super strong bullish move up, but then what happens, right? Price starts to consolidate. And even if we drop down to the 30-second, this is where I took my trade from. Not here, but a little bit later. We get these strong bullish candle closures up, and if we were truly bullish, what would price want to do? Either put in a retrace and then flip hard out of it, or continue blasting up, ripping through all this liquidity. But what did price do? Started to consolidate, and then we get some displacement to the downside, right? This was in real time. I was honestly thinking about taking something like this, but I didn't, so it doesn't really matter, right? And the trade idea here would be after failing to deliver higher, price started to consolidate and then displaced the other way, signaling shorts, right? But that wasn't the trade I took, right? So then price starts to rip down, and at this point I'm like, okay, most likely it's going to be shorts today, right? Price is going to move bearish after seeing this bullish move fail, right? So what did I see? See this leg come down, right? On the 1 minute, we are, where is it? Right here. On the 1 minute, right, we're closing near our draw on liquidity. What did I do? Scale down to the 30-second, and saw a retrace leg that got put in, and this retrace leg wasn't strong at all. As you can see, it's slow, choppy delivery up, right? It's not like these strong candles leaving fair value gaps, right? Just slow, choppy delivery, retracement back into this leg. We tap into a 30-second fair value gap, right? Respect it with these wicks. Then we get strong displacement out of that a strong flip out of that 30-second gap, and this is where I entered. Stop goes above the high, and my target was the 4-hour wick low, right? And I went break even. Let me change that. And then I went break even at this low right here. So right when price tapped this low, it was a risk-free trade. I moved to break even, and ultimately I got stopped at break even, right? Here is a crucial mistake that I made, right? So as you can see, when we were looking at this, at the 4-hour chart for our draws and liquidity, right? I saw this 4-hour low, this 4-hour high, but what did I fail to mark out? A daily previous day low. Right here, previous day's low, wick low, which would be right here. Here's the 4-hour wick low. Here's the previous day low. And what happens? Price touches the the previous day low, which should have been my draw on liquidity, and that would have hit for a 1 to 1.4 RR, which would have been perfect. But I failed to recognize that and got stopped out here, locked myself out of my account, and we get a pretty nice, and then same thing happens, right? Look, so break even trade here. We get this strong bullish move up. This is signaling bullish momentum, but then we start to consolidate again, right? Consolidation after a strong bullish move, and then we flip hard with displacement, right? Forward tested this trade. Bullish move, that fails. Price slows down, then we flip to the downside, right? So same thing here. This trade played out very nicely. And we ultimately take out the 4-hour wick low. That was my initial draw, but got break even today, so it is what it is. I was disciplined enough to not revenge trade, take my break even. There's going to be other days. And yeah, it's bigger than one trade, right? So that's pretty much it for today. The biggest thing was that I want you guys to take away from this video is that once you see a strong bullish move up, in this case, right? If price was truly bullish, we would tap into this gap and flip hard out of it, or continue ripping through with speed. But this bullish momentum failed. We consolidated, displaced lower. Same thing here. Bullish momentum failed, consolidated, displaced lower. And that was like the whole story of today, right? And we got some really nice continuation shorts. Beautiful day, expansion day, and now I guess we're rebalancing this entire leg here. I don't know if some news came out, probably, right? But yeah, did news come out? Let's see. No news came out. I guess we were just rebalancing this. So now we're trading in this 4-hour gap. Depending on what price does, I'm not going to long into this gap here, obviously. So we'll see what tomorrow has to bring. That's it. See you guys in the next video. Peace.